Hello, this is Gary Schnitkey, and this is a 5-minute Farm Doc Daily dealing with farmland prices in 2021. Farmland prices increased but are still in line with market fundamentals. USDA recently released the 2022 price for all farmland in Illinois, and that value was $8,950 per acre. That $8,950 per acre is 13% higher than the 2021 value of $7,900. That 13% increase is large, but there have been years in the past 20 years or since 1970 in which those increases have been larger than that. Other studies have suggested that farmland prices are increasing similar to USDA's. Chicago AgLetter recently released suggests that farmland prices have increased 18% from July 1 in 2021 to July 1, 2022. Similarly, Purdue Agricultural Economics Report released a study that indicated that farmland in Indiana increased by 30% last year. Another study by Farm Credit Illinois looked at 20 benchmark farms in the southern 60 counties in Illinois and found that prices on those farms increased by 28%. Two broad categories of factors impact farmland prices, and the first are farmland returns. Those farmland returns are usually measured by cash rents, and we saw cash rents increase last year up to $243 for an average in Illinois. That $243 per acre average was up 7% from the 2021 value. The other factor that broadly impacts farmland prices are interest rates. Often we look at 10-year constant maturity treasury rates to gauge interest rates for farmland. Over the last 10 years, those interest rates have been relatively low. From 2013 to the present, 10-year CMT rates have averaged 2.07%. Those rates increased up to 3.31% in June of this year as the Fed tried to control inflation. Since June 1, those rates have decreased and they are now at 2.7%. Overall, the combination of cash rents and CMT rates impacts on farmland prices are often measured by capitalized value. That capitalized value captures the impacts of fundamental factors on farmland prices. When capitalized values are below the farmland price, which happened during the 1980s, we would say that fundamental factors suggest that farmland prices are too high. During the 1980s, those farmland prices eventually came back down to the capitalized values. From the late 1980s to 2006, farmland prices and capitalized values tracked each other closely. From 2006 on, capitalized values have been above farmland price. In 2006, we had the ethanol build leading to higher commodity prices, and since 2006, we've had periods of very low interest rates. You can see that by looking at the 10-year Treasury rate, which has been very low. Those rates reached very low levels in 2020, and as a result, the capitalized value was over $24,000 per acre. Those capitalized values have come down in recent time and now are very close to what farmland prices are. That the capitalized value is still above farmland price suggests that farmland prices are still in line with fundamental factors. However, if we move forward and we either see a decline in farmland returns, which could happen because of lower commodity prices, or interest rates increase, we could see those capitalized values fall below farmland prices. At that point in time, we would say that farmland prices have more danger of falling. Still, right now, farmland prices are in line with capitalized values, and We would not expect farmland prices to decline until we see either farmland returns decline or interest rates increase. You can read more about this issue in the FarmDoc Daily, linked to the video description.